reports just in, Mr. Koskelo, is that the IFC will be playing some sort of a part in providing liquidity to enable banks wanting to acquire the 9 rescued banks to be able to do so. What role do you see yourself playing in Nigeria in the midst of so many changes?
Hi, Lerato. First of all, good to be with you. I would rather phrase it slightly differently. We are going to play not only in the liquidity front, but also in terms of the strengthening and giving confidence to the rest of the market that Nigeria is that the reform agenda is a solid one with a relatively good track record at this point. But what is needed currently is the strength of the investor community to take this thing to the next level. And the 2 transactions that we are announcing today are the first steps on our own agenda to show the international community that Nigeria is a good place to invest and that there are opportunities now that are emerging as part of this restructuring of the banking sector.
Okay, talk to us about your partnership with Guarantee Trust Bank and also with First Bank Nigeria. These are seen as Tier 1 banks, banks that have been providing universal lending in Nigeria and that have really weathered the storm in a very good way.
Correct. One could take the argument that perhaps we are not needed on the first Tier 1 banks, but we have to significantly say that it sends a signal to the whole community. As said, the Tier 1 banks, the GT Bank and as well as First Bank, we have the financial package includes both equity type funding and as well as a long-term debt. And it sends a signal to the market that both the types of funding is needed and worthwhile. As you mentioned correctly, we are also in discussions with other banks, be it Tier 2 banks, to support similar agendas that are still to come.
All right. Now, what we do know is that the IFC has outstanding debt of about $25 billion, so says your website internationally. And just in terms of the amount of loans that are out there, it seems to be a particularly small number considering the infrastructure needs that are needed not just in Nigeria, but in Africa as a whole.
First, I'd like to highlight something in terms of Africa. Last year, last fiscal year, which we ended up just a few weeks ago, we committed $2.3 billion in sub-Saharan Africa, which was a growth of significant growth from the $1.8 billion the year before, which is again a growth from the years before. So our experience in investments in Africa on our own account is very positive. The numbers that you're quoting don't actually include what we call the mobilized funding that we bring along. So that, as an example, last year on our account we invested $12.6 billion, but we also mobilized directly under our name another $5 billion that came to the clients. But we have to realize that it's not only the amount of money. What our investments tend to go are catalytic. They're signaling to the rest of the market that these are worthwhile investments. And hence, the impact is typically about 6 to 7 times of what we ourselves invest that ultimately comes out from the end result.
All right, let's talk about the infrastructure dimension of the work that you'll be engaging in Nigeria. We know that, for instance, with the AMCON that has now been promulgated into law, the idea is to try to mop up toxic assets and redirect funds into government bonds because the government has a very concerted effort to try to reinvest in energy, for instance, in roads and transportation and the like. What role would the IFC be playing within the infrastructure space? Are you having a targeted approach, for instance, and saying, well, we'll focus purely on energy and electricity sectors because this is where the biggest need is at?
I think the infrastructure needs are not so particular only for Nigeria, but infrastructure needs are one of the biggest development challenges we all have, irrespective whether we talk about India, China, Nigeria, or Brazil. So we see a very large role for us as a catalytic and giving partially advice. What our biggest role is to try to give advice and invest and show that also private sector can play a very big role in infrastructure projects. Leveraging public funding and doing public-private partnerships And in those type of situations, we typically are the pathfinder on behalf of the private sector in general. So in terms of Nigeria, yes, we do have a targeted effort, looking at certain risk risk money, looking at equity funding that is going for the first bigger investments, but also importantly trying to work on the policy frameworks with the government to look at what we could actually achieve together with the public sector side and our colleagues in the World Bank Group overall.
All right, Mr. Koskelo, my guest host would like to ask you a question. Kirby.
Hi, Mr. Koskelo. It's Kirby Lachranji here from Axis. You know, with the IMF pretty much busy trying to bailing out Europe and with many different agendas, specifically focused on G7 countries, do you find this is becoming an over-reliance or a reliance more on organizations such as yourselves?
We see, again, let me phrase it the other way, that overall, globally, I think we will go towards a period where the private sector has to play a much more significant role in the development agenda than it did before. So there's not enough money in the system, specifically in the public side, to respond to whether those are the needs on the infrastructure side or the, let's say, agri-industry or the SME business. So we need to find new mechanisms how the private sector becomes also part of the development agenda. And yes, indeed, therefore, we see ourselves playing a much more significant role in the future than perhaps we've done in the past.